The sound of a ticking clock lingers, then slows. Something is shifting. Prices are not simply rising. They are being allowed to rise. Across markets and borders, purchasing power is quietly being drained. Not by accident, not by fate. In 2026, inflation is no longer treated as a temporary crisis. It is managed. It is absorbed. It is passed down. Wages are left behind. Savings are thinned. And the cost is redistributed away from balance sheets and onto everyday lives. What is being felt at the checkout, at the fuel pump, and on electricity bills is not chaos. It is the result of systems under pressure where consequences are delayed, obscured, and normalized. And while the numbers continue to climb, the real question is no longer what is happening, but who it is happening to. Imagine waking up one day and finding your money buys less and less each month, even when you earn the same amount. That's not a future nightmare. It's happening right now. According to the International Monetary Fund, IMF, global inflation is expected to fall in 2025, but still stay above target levels in many countries, especially in advanced economies like the United States. And the Organization for Economic Cooperation and Development, OECD, warns that while inflation eases, it will linger longer than expected and continue to squeeze households' budgets worldwide. This isn't just numbers, this is real life. They tell us inflation is cooling. They show us charts, and they point to falling numbers. But we don't live in a chart. We live in the real world. And in the real world, our money is shrinking. It's the purchasing power lost. Even if the climb slows down, the prices are already at the peak. Wages haven't caught up. Your hard-earned savings? They aren't just sitting there. They are evaporating. Year after year, your stored money quietly loses value. The bank returns pennies, while the market takes dollars. And let's be honest, this doesn't hurt everyone the same. It's a tax on the struggle. The less you have, the more inflation steals from your plate, means low-income families spend more on essentials. When prices rise, they're hit hardest. The OECD said that the world economy is walking on a knife's edge. Growth is stalling. 2025 was hard, and 2026 is looking like a squeeze. Trade barriers are going up. Tariffs are rising. And every time a politician signs a paper at a border, you pay for it at the checkout counter. Business investment is drying up. Confidence is low. This isn't just a dip. It's a structural shift. But here is the truth they don't want to put on the evening news. We blame the governments. We blame the supply chains. But look closer at the culprit. This isn't just a theory, it's the data. Even the International Monetary Fund, hardly a radical organization, has pointed out that nearly half of the price hikes we've seen weren't about rising costs. They were about record profits. Big corporations didn't just pass the bill to you. They added a convenience fee for themselves. They used the fog of a crisis to pad their margins, trapping you between rising prices and zero choices. They call it price discovery. We call it a shakedown. While the headlines talk about resilient markets, the reality inside your home is a tactical retreat. This is the dark math of greedflation. When a company's costs go up by 5%, but your price goes up by 15%, that gap isn't inflation. It's a transfer of wealth. It is the systematic hollowing out of the middle class to protect a profit margin that was never supposed to be permanent. For the people at the top, inflation is a variable on a spreadsheet. But for the householder, it's a thief in the night. It's the father skipping a meal so his kids don't notice the portion sizes are smaller. It's the choice between a full tank of gas to get to work or the medicine you're supposed to take every morning. The most dangerous part of greedflation isn't the high price. It's the realization that even if the crisis ends, the prices aren't coming back down. The new normal was built on your struggle. And when prices refuse to fall, the system doesn't ask corporations to give back their margins. It doesn't force profits to come down, and it doesn't protect households to fix the inflation they allowed. They don't confront power. They target demand. They apply pressure where resistance is weakest and call it monetary policy. But what they're really doing is making it more expensive for you to exist. It feels like a shakedown. And this is where interest rates enter the story. When central banks raise interest rates, the goal is simple: to make life expensive enough that people are forced to spend less. Spend less, and shelves begin to fill. Products pile up, and when demand collapses, prices are supposed to fall. That's the theory. That's the intention they present. Think about how this actually hits your table. If you owe money on a credit card, the rent on that money just went up. You aren't buying anything new, but you are still paying more every month just to keep that debt. That house you wanted? The monthly payment just jumped by hundreds of dollars. Not because the house is better, but because the rent on the loan is higher. When it's expensive for a company to borrow money, they stop growing. That means fewer raises and fewer new jobs for people like us. They call it a solution. They want to make you poor enough that you stop buying things. If you stop buying, the stores have to stop raising prices. But look at the cost. They are fighting high prices by taking the money right out of your pocket before you can even spend it. For the person trying to pay rent, buy gas, and feed a family, it feels like being punished for a crisis you didn't create. You are being squeezed from both sides. High prices at the store and high rent at the bank. Everything we've talked about, the record profits, the rising interest, the shrinking paychecks, it isn't just a series of bad luck. It is a system under pressure where the consequences are shifted away from the powerful and onto your everyday life. This matters because it's your life. It's your food, your rent, your future. As the gap widens, the middle class is being hollowed out. The system is being rewritten, and right now, it's not being written for you. Those who can afford price increases, often large corporations, benefit. Those who can't end up paying more and saving less. Inflation doesn't just take your money, it takes your time. The question is, how much more are you willing to give?